Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is April 15th, 2015, also known as Tax Day. I've already done my taxes, already sent the money in yesterday that I owed to Uncle Sam. I actually like not paying or not getting a refund at the end of the year. If I do, I feel like I'm giving Uncle Sam a tax or an interest-free loan for the entire year, and I don't want that. I mean, I know it's nice to get that chunk of change back every April, but then I really think about it and say to myself, well, I could have been enjoying that money, for the previous 12 months, but instead I let the government enjoy that money. So I'd rather just pay money at the end of every April. Actually, the ideal thing is to be perfect, not have to receive any money, not have to give any money, but rarely is that the case. Any case, let's go ahead and look at some of the charts here. First of all, the S&P 500, probably one of the best days I've seen in ages, just from a technical standpoint. The market is looking really solid. In fact, today's move feels a lot like what we saw back in late January and early February when the market broke out. And that was really the last time we've had any direction in this market. And so, I mean, if we can keep this momentum going, that would be great. If you look back at January, you can see it was a big time chop fest and it was really difficult to trade, much like what we've seen over a longer period of time and during all of March and to most of April. But now with today's breakout and up until today, that was really in question whether or not that would happen, especially during this sell-off during the early parts of yesterday. Excuse me. So today's breakout's big, a lot like what we saw in early February and the ensuing rally that happened thereafter. If it plays out like February did, then you have to be somewhat concerned about this resistance, dating back to November of last year, where the rally stalled out at and has stalled out every time before then. It's a little bit of an ascending or a rising wedge, which is bearish. But if it's not testing that resistance yet, then I don't see that as being a threat at this point. But when it starts getting around 2144, 2150, depending on where that level of resistance is at that point, that's where you have to start getting a little bit concerned about whether or not the rally can sustain itself at that point. But overall, though, I mean, really solid. One of the things that I have noticed about this market versus previous ones, where the trades, they will work out right away, and if it doesn't work out right away, you just get out of them and boom, you're done with it. This rally has been more about being patient, quite honestly. I mean, holding stocks a little bit longer than what you care to hold them for. Maybe it doesn't break out the first day or the second day, but eventually it does. Case in point, ETN in our portfolio today, up 1.8%, looking really good. We got into this stock back on 4.7. Okay, on 4.7, it looked like it was breaking out then, and by the end of the day, it had given up, all signs of hopes, and then it just goes chopping around here. Now, this trade setup itself had never been violated. Okay, it got close to it yesterday. I was about ready to close the sucker out yesterday, but then it rebounded nicely, and then you got the follow through today. So this is a perfect case in point where the trade setup had always been there, but you had to be a little bit more patient for it. Now, I'm not saying that every trade that you take is going to be like that, but in the case of ETN, it was. And then when the momentum got going in its favor, it has done really good, as you can see off of the 30-minute chart there with ETN. Another big name that's been doing very well was a position that we got into yesterday. Didn't do anything for us yesterday. In fact, we closed down on it yesterday, but now it's breaking out. It's breaking above the 200-day moving average with little problem. So this is another trade just really breaking out solid, breaking out hard to the upside, and they do have earnings next week, so we won't be holding it that long, but we're going to ride that wave as long as we can up until that earnings comes out. Also, the reason why I don't play earnings, since this is a valid question during the thick of earnings season, basically because of the unpredictable nature. Yeah, you can know whether or not they're going to beat the earnings or they're going to, or the expectations or not, and maybe you call it right, but then you don't get the reaction to the stock correctly. So, I mean, there's just so many variables that you have to get right in order to be on the right side of the trade that it's not worth risking it for me. So I don't ever play earnings. I just go ahead and get out. Now on my long-term investments, on my share player investment system, I do hold through because the duration for those trades are much longer periods of time. But when you're only talking like 1 to 2 weeks for a trade, you don't really have the time to make up for those losses if you're wrong. So yeah, I avoid earnings at all costs. All right, let's look at we talked about the S&P 500 already. You know, solid trend line there, breaking below or breaking above this declining resistance level that goes back off of the highs from March. That's huge, really. And then we're trading above the highs, not the highs from March, but from this period of time here where it did make it a rally back on 323. We're above that now. I think if we can get above this 2117 level there and make some new all-time highs, there's little in the way for this market going forward. So very, very excited about how the charts are setting up and how we're getting a little bit more consistency out of this market here. It's not the big 40, 30 point moves that we've become accustomed to seeing, like what we saw back in December, back in October, back in early February, January at times. It's not those kinds of moves. I mean, if you look at it, I've owned UPRO, okay? This will give you a good example. I have owned UPRO, which is a 3X ETF, since April 1st. Now, where does that put my entry at? 132.12 at the bottom of this sell-off here that was coming on. So we got in on UPRO, which is the 3X ETF of the S&P 500, back on 4/1. The stock is only up 7.5%, despite the fact that since 4/1 the S&P has been up 1, 2, 3, 4, 5, 6, 7 out of 9 days. That gives you a little bit of an idea of how the volatility has fallen off in this market. You look at it again today; it's down 5% after a 2-day spike. So the gains are not. That's why sometimes you have to be more patient with the trades, because there's not this huge catalyst with the market that is just flinging these markets or flinging the stocks that we're trading way up in the air there, and you're booking 5-6% of profits in a blink of an eye. It's just not happening right now. Not ruling out that it can't happen on particular stocks. You got a lot going on with like the Solars today and some others, but in general, that's not really happening across the board. So then you have IWM. IWM breaking out, really nice chart. This one's at all-time highs today. Excellent looking chart. You got the NASDAQ, which has been struggling with that 5,000 level for quite some time. But now it's making another attempt to go into the 5,000s and trying to stay there. So a lot of these charts are all lining up, looking very similar to each other. In fact, you could probably say that it's the S&P 500 that, even though the chart does look good, it's not as bullish yet as the Russell and the NASDAQs. Gold miners, GDX, breaking out very nicely there. You got somewhat of like a cup and handle type action, not a textbook type pattern, but it doesn't look bad at all. If you could have gone in at 1984, that's the ideal price. If you're looking to get into it right now, probably put a stop loss below 1919, so maybe 1918, 1917. That gives you about, I guess that's about a 4% loss. That's really right at the edge of what I'm comfortable with on my own personal swing trades. But nonetheless, definitely a risk-reward opportunity there, assuming that the momentum in the gold miners can continue. And then you got NUGT, which a lot of people are also trading. I can't really do that one, but it's the same setup as you got in GDX. It's just that the movements are so much more severe in both directions that trying to manage the risk on something like NUGT, unless you were able to get in in the low 11s, it's really not worth jumping into at this point. USO, this is a lot of what's rallying today, the oil stocks in particular. You got oil up 4.5%. Nice breaking out of this resistance level from last week. And now it's just trucking. So if it gets over that 20, I think that bodes really well for USO going forward. It's not too far from that. Another day like today, and it'll be well above it. But yeah, that stock's looking much more bullish these days. You're definitely seeing where a lot of shorts are starting to cover their positions. BP, here's one that I like, but it's I honestly like on BP to see this thing pull back, and I think that there's a chance that we will see some consolidation in oil in the coming days. And if so, something like BP back to like 42 or so would be a good entry price point to get into. The reason why I didn't get into any oil today is because this rally is really in need of a somewhat of a consolidation or a pullback. So if you look at USO, it's starting to break above some resistance at 20. 20 gets a lot more friendlier, but I mean, look at how much it's already run. So it's gone from like the 15s back in mid-March all the way up to basically $20 a share. That's like a 30-something% rally. That's really not something that you want to be jumping into at this point of the rally. So you got HAL, especially when it's like a big commodity like oil. So HAL breaking out and everything, but you can see these movements. I mean, HAL is up 20% already. SLB 80 to 91, so over 10%. That's like, I don't know, like close to 15%. So I don't want to be jumping into these oil stocks right now when there's a good chance that we've seen the biggest chunk of the rally already take place. A couple of positions that I do, or setups that I do like. CNO is one of them. Coiling nicely right there above support. I think that this one has the potential to get over 18 pretty quickly and maybe even make a run towards 19. I do like this. I think this is a good setup for tomorrow to keep an eye on. SPWR, you got the breakout here today. It's giving back some of those gains, getting a little bit better of a risk reward entry right now. You could get in with a stop loss at 32.99, get in at 33.30. You're probably dealing with let me add that up real quick here. I think it's about 4%, but just to be sure. Yeah, you're pretty much doing like 3.94%. So it's right there at the cusp of what I would feel comfortable with trading. So you have SPWR. You also have BSX. Not bad. I don't know if it's quite breaking out right now. I think it needs to get about a little over 18.15, 18.14 to get long on it. Then you have DISCA, and I've been weighing this one all day. It's just been sort of clunky after making that initial run up, but you can see huge inverse head and shoulders pattern on the daily. Now it's breaking out above it, and it looks very familiar with to TEX, which has just gone absolute bonkers today. And I had been highlighting this one, but the thing just sort of broke out and went running right out of the gate today. I'm not a huge fan of placing trades in the first 30 minutes of trading, and you really would have had to got in within the first 30 minutes to capitalize on this move. But yeah, I mean, I could see DISCA possibly doing that, maybe not all in one day, but I mean, it's really the same pattern there that between those two charts. NUS. Not done anything with this one in a long time. It's pulled back, on light volume for goodness, what is that, 6 straight days, but it hasn't really violated any technical parameters. So it's a light volume pullback. Shows a lot of signs that it may be ready to blast off here in the mid 60s upwards. And then you got PBI, Pitney Bowes. This is one that has rapidly improved throughout the course of the day. For most of the day, it was sort of screwing around, not doing much of anything, but now it's starting to pick up some. I think you can put a stop loss. Where did I have my stop loss at on this one? 23.10. So you're not risking a whole lot by putting it below these lows from April 8th. So I like to set up a little bit of a bull flag that it's coming out of, and just be cognizant of earnings on all these trades. You don't want to be holding something into earnings and you're not realizing that that you're about to get slammed by somebody's after hours earnings report. So keep that in mind. If you guys have any questions, man, feel free to email me, ryan@shareplanner.com. I'd love to have you guys in the SharePlanner Splash Zone. If you haven't tried it yet, please do. It's a great service. You get all my swing trades real time via text, email, and also posted in the chat room with plenty of explanations. I'm completely transparent. I provide all my trades. I provide the stop losses, the target, the entries, everything. So nothing to hide, nothing, nothing shady about the service at all. I hate even having to say that, because there is so much of the industry that has compromised their values and moral ethics for the sake of landing another subscriber. I'm not like that. I want to be as upright and forthcoming with you guys. And if you have any questions at all, definitely email me. I'll get back to you. And until then, y'all have a great day, great evening, and let's see if we can keep this together for the last 45 minutes of trading and into the rest of this week. Take care and God bless.